Earnings per share, EPS, is a financial metric that represents the portion of a company's profit allocated to each outstanding share of its common stock. It is a key indicator of a company's profitability and is widely used by investors and analysts to assess a company's financial performance on a per-share basis. Here's how EPS is calculated and some key points about it. 1. Calculation. EPS is calculated by dividing a company's net income attributable to common shareholders by the total number of outstanding shares of common stock. The formula is expressed as follows. EPS equals net income, preferred dividends, average outstanding shares, net income. This is the company's total profit after deducting all expenses, taxes, and interest payments. Preferred dividends. If a company has issued preferred stock, any dividends paid to preferred shareholders are subtracted from net income to arrive at the earnings available to common shareholders. Average outstanding shares. This is the average number of shares outstanding over a specified period, which can be calculated by averaging the beginning and ending shares outstanding, or using weighted average shares outstanding if the number of shares changes during the period. 2. Interpretation. EPS indicates how much profit a company generates for each outstanding share of its common stock. Higher EPS values generally reflect higher profitability, while lower EPS values may indicate lower profitability. 3. Types of EPS. Basic EPS. This calculation considers only the number of common shares outstanding and does not account for dilution from potential convertible securities. Diluted EPS. This calculation adjusts for the potential dilution of EPS from convertible securities such as stock options, convertible bonds, or convertible preferred stock. It assumes that all potential dilutive securities are converted into common shares. 4. Importance. EPS is a critical metric for investors as it provides insights into a company's earnings performance on a per-share basis. It is used in various financial analyses such as price-to-earnings, PE, ratio calculations to evaluate a company's valuation and compare it with peers in the industry. In summary, earnings per share, EPS, is a fundamental measure of a company's profitability and is widely used by investors and analysts to assess its financial performance and valuation. It provides valuable insights into the earnings generated for each outstanding share of common stock and is a key component of financial analysis and investment decision-making.